And so here we covered the stock specific risk, but it's not done. There is also the peers one. Okay? So for the peers risk, you need to know how the peers did and when. Okay? Only the first one will drive the momentum. So before you buy a stock, you go in the app and you search what peers drove released earnings before your company. Okay, you have to do it. And again, you have to do it even for when you want to buy any stock. You have to compare it against the peers. There is another video about it. Okay, if you don't compare a stock against peers, you're giving yourself no alternative. It means that you don't know what you don't know. Okay, so never buy a stock without checking it against its peers. Like, this is a bad mistake. Okay, you don't. If you tell me, is this stock good? You should be able to tell me why it's better than all the peers first. But for earnings as well, earnings, it's more, you have to check what peers, when they timed, what they released right before. The peers who released earnings, how they did right before. And so banks, for example, they move together. Okay, so you saw the prediction was high for earnings, and the last two earnings we made a lot of money on banks. Plus with Trump, it's easier because Trump historically has been supporting the financial industry, and has been not so good for the healthcare industry. And so we've made some money, but every time it's the same thing. It's only the first one that drives everything. So JP Morgan, they released their earnings, they did great, it goes up. Bank of America will release the earnings the next day, but the stock actually already went up, because it went up as soon as JP Morgan did well. Because everyone thought, oh, JP Morgan did well, it means Bank of America is going to do well as well. It's a bank. Yeah, thank you. But by the time you enter, it's getting priced in at the same time. And same thing with businesses that profit from trading, you're going to see. But basically, yeah, so Hood, it goes well, it does well. They say, oh, trading activity was amazing, but okay, I already bought it because I knew it. But the guy who didn't buy it is going to think, oh, how am I going to profit? Let's buy coin, because coin is raising earnings the next day. So yes, sometimes it works when they do well, but sometimes they will still do well and it will not work. Why? Because it's been priced in. So they have to do better than what we think they will do. Okay? You get it or no? As soon as Hood beats and gives a good guidance, coin, everyone is going to think, okay, Coinbase as well. So it will go up. And then when Coinbase does well, nothing happens, because we already expected it will do well. People will sell, maybe it will even go down. But if they do even better, then okay, it's another story. Pre-earnings. In the app, you go in the Signals tab, you select pre-earnings. And there, you can see all the peers of the industry you select. So here, for instance, semiconductors, I'm not sure how you say it. There are a lot of industries. You select one. And then here you see it's NVIDIA. Okay. But it could also be, so here you see NVIDIA. What do you see? You see the earnings countdown. It's the number of days left prior to earnings. For NVIDIA, it's 73 days. So earnings are in 73 days. And you can see the market cap, and you can see the returns over the last month. So here you select, you play. You can select another one. You see here it's Micron. They are releasing earnings in 11 days. You can keep going. TSM, AVGO, Broadcom. Okay. You see when, so the ones here in the bottom, they are releasing earnings soon. These ones are releasing after. And you can see the one that already released also before, it turns negative. And you can see it here as well. So here it's ranked by number of days. You can see the yield. So you can again pick another period of time. And you can scroll here and you can see which one is releasing earnings when. Okay? And you can see which one released, which one is next. You can try to buy the next one knowing that it's going to correlate, but without taking as much risks, because even if the previous one fails, you know that the next one might still do well. So you might just pull benefits from it while limiting your downside. So this is very cool tool. Huh? Me, I use it. I use it a lot. Let's keep going. So thanks for watching. This was another very long video. I'm trying to make them all short, but it's a bit it's a bit difficult. There's a lot of content to cover, and there's a lot I haven't said even. So alright, but thanks for watching and speak soon. Bye bye.